Recently, URA released the fourth quarter 2020 real estate statistics. So the thing is, with all these statistics, we can actually spot patterns and opportunities. So let us take a deep dive in. Hi, I'm Ivan Chai, one of the co-founders of iQuadrants, and over here I'm in charge of research and forming strategies into investing. So do subscribe to our channel, right, so that we can provide you with strategies, tips, and our insights. When we look at the URA data, it's very interesting because what is released is for example, the rental index from the third quarter of 2020 to the fourth quarter of 2020. And when we look at the rental index, third quarter it was 103.8 and fourth quarter it was 103.9. In other words, on the overall basis, nothing much changed. But when we take a deeper dive into the numbers, what we see is that for OCR, the number is actually 105.6 that increased to 106.6. In other words, the rental rates actually increased for OCR, whereas for RCR it's 108.3 all the way up to 109.3. In other words, it's also increased for RCR. So the thing is, when we look at the CCR region, this is where we see that the index went from 102.8 down to 101.6. In other words, there is actually a drop of rental rates that is in the core central region, and this is worth noticing because other than this, we will also look at what's happening for the vacancy rates. And when we look at the vacancy rate that's happening in Singapore, what we see is that for the vacancy of private residential properties by market segment, the OCR region is at a vacancy of about 5.1%, whereas the RCR is at 7.3%. And when we look at these two numbers, what we see is that over the past few quarters is almost about the same. In other words, there's not much change in demand and supply in this area. However, when we look at the CCR region, today the vacancy rate is 11%. So what we see is that there's an increase in the vacancy in the CCR region over the quarters. And when we combine both the drop in the rental rates and the vacancy in the CCR region, what we see is that there is a pressure downwards. And with this, two things will happen. For the investors or homeowners in the CCR area, you see rentals going down, you see vacancy going up, and you may be pressured to sell. But the thing is, if you are the homeowner or investor, you need to dig in and sit through this thing. However, for the investors that's looking to buy, when you compare between CCR region, RCR, and OCR, think about it. Which one will give you the best opportunity in the resale market? My take is that with the vacancy rate being at 11% in CCR area, you will be able to hunt for an undervalued deal easier over there. So, I hope you guys have learned something in this video, and do remember to give us a thumbs up and also subscribe to our channel. So once again, I'm Ivan Chai. See you. Bye.